Right when Wall Street thought the expectations for Nvidia were too high coming into their Q4 print and sold the stock off by nearly 10% earlier on in the week, what does Nvidia come in and do? They absolutely smash and smoke any and all estimates Wall Street had for this stock, not just from this most recent quarter, but also for their upcoming Q1. As we walk through today's financials, you'll see just exactly why Nvidia still remains on top of the world. Their business model still remains absolutely bulletproof, and it's showing no signs of slowing down, especially when their data center revenues once again comes in higher than their previous quarter's total revenues. We'll also take a look at this one from its stock chart. There's basically no signs of slowing down Nvidia. We'll highlight some levels where I think you can be a buyer in shares of Nvidia and likely where this one is headed in the near future. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Nvidia up nearly 230% over the past 1 year and up over 36% just year to date is not holding the stock back, as shares are higher by nearly 8% in the after hours. That is on the heels of their Q4 results, which are absolutely stellar. Revenues coming north of $22.1 billion. That was good for 265% growth year over year. Did beat estimates by roughly $1.5 billion on that top line. In terms of non-GAAP EPS, that came in at $5.16. Again, beating estimates by roughly 52 cents. Initially, you saw the stock sell off right around 3%. I think people were premature to assume that the expectations were too high and this company would maybe come in and post a bad outlook, but neither of those things happened. And instead, Nvidia absolutely smashed any expectations both in this most recent quarter and the outlook. Now, data center revenues coming in higher by roughly 409% year over year. That is a record data center revenue figure. Gaming revenues also proving to be strong, up 56% year over year. Professional visualization also up over 105% year over year. You did see a slowdown in automotive revenues, as though those were actually down 4% year over year, but is seeing a tick back up sequentially, up 8%. Now, in terms of the outlook, before we really dissect these Q4 results, let's take a look at their Q1 outlook for fiscal 2025, which is really calendar year 2024. So Nvidia expecting revenue to come in the range of $24 billion. Estimates on Wall Street were closer to $22 billion, plus or minus 2%. So what I want to show with Nvidia is they have done this in the past and they're doing this once again. This is a company in Q3, they guided for Q4 revenues to be right around $20 billion, plus or minus 2%. As we saw, they just came in with a figure of $22 billion. So estimates on Wall Street for this Q4 were right around $18 billion at the time of their Q3 announcement. And so what Nvidia does is they guide for a revenue figure $2 billion higher than estimates on Wall Street, and then they come in with a figure of $2 billion higher than their own estimates. And they've done this over the past 2 quarters, and it looks like that's what they're doing in the upcoming Q1, as they're guiding for roughly $24 billion. The estimates was at $22 billion, and really what I expect from Nvidia is to come in right around $26 billion. So that would be a shade higher than their own estimate of $24 billion. That's what Nvidia has shown they'll do in the past, and there's no reason for me to believe that that's not what they will do in the future. And this $24 billion figure is an absolutely staggering number. As you see, for Q2 of this upcoming year, estimates were at $23.5 billion. And so the stock is likely going to have to go again through a lot of re-rating cycles where the revenue figures and earning figures get bumped up over and over and over until Wall Street realizes this company continuously provides an estimate figure higher than what Wall Street really thinks, and then comes in with an actual figure even higher than their estimates. And it's consistently shown that it is able to do that. In terms of non-GAAP and GAAP gross margins, those are expected to be right around 76.3%, and then non-GAAP gross margins expected to be 77%. As we see, that will be another tick up on their gross margin. So not only is this company getting more revenue on their top line, they're able to drive that down to their bottom line way more effectively than they have in the past. All things considered, the guidance, mainly from a revenue perspective, looking absolutely fantastic. And then, as we spoke, all the estimates, both on the revenue and earnings side, will again continue to have to be bumped up. Again, Nvidia posting a revenue figure of right around $5.16. That came in ahead of their Q1 estimates. And so when Seeking Alpha does have these figures updated, that will be again staggering growth both in their Q1 and then subsequently will translate over into their Q2 and Q3 and so on. And really, this is what we talked about in our last video when we covered Nvidia's Q3 right around 2 months ago, the fact that they continuously come in and not just beat estimates, but beat their own estimates by a large amount. Now, as we spoke at the top of the video, data center revenue is coming in at $18.4 billion. That is higher than their total revenue figure in Q3 of fiscal 2024. This is something they've shown really over the past 2 quarters as well, as data centers seems to outpace the total revenue figure in the most previous quarter. And so Nvidia has been doing that since really Q2 of last year, and it seems like that will continue maybe for another quarter or two before finally we see a normalization in the growth rates, at least on that revenue side. Now again, $22.1 billion of total revenues, and that included growth really across every single category on a sequential basis, especially gaming coming in pretty strong on a year-over-year basis. On a quarter-over-quarter is slowing down just a little bit, but an overall fantastic Q4 in terms of top line revenues. This was also Nvidia's final quarter for the year, and so their full year 2024 revenues came in at $60.9 billion, nearly $61 billion. You see, back in fiscal 2023, they had posted revenues right under $27 billion. And so on a full year basis, you saw a company growing their top line by roughly 126%. So when you see this company's stock absolutely climb the way it has, yeah, that's not on a fluke, and that's based on the numbers that Nvidia has been posting. Now, one thing I do want to point out is on a forward price to sales basis, this company does look expensive, absolutely. Trading at an 18 times forward price to sales certainly is no cheap stock, and that is something to consider. But in my opinion, there's 2 main reasons why this company now trades at a very premium price to sales multiple. The first one being the growth rates. You see, this company had just grown north of 120% on their top line. They're expected to post another growth rate of right around 60% on that top line for the full year 2025, that is calendar year 2024. So consider the fact this company is still expected to grow at a very rapid clip on that top line. The second reason is you have expanding gross margins. You see, back in fiscal 2023, they were sitting at right around 59.2% gross margins. They expanded that by roughly 14.5 percentage points, now up to 73.8%. And keep in mind, they're guiding for a Q1 with gross margins right around 77%. So they're expected to continue to see expansion on those gross margins. So not only are they able to grow their top line, they're able to generate more of that top line revenue into bottom line earnings, and that will ultimately, again, demand a premium on your sales. And that is exactly what Nvidia is getting, as you see their price to sales now sitting at roughly 18 times, but their price to earnings on a forward basis still sitting at right around 32 times. And so that's something to keep in mind. If you see this company trading expensive from a sales perspective, that's because they're expanding gross margins and they're also growing their top line revenues at a pretty rapid clip. Taking a look at the statement of income, and this is something to absolutely marvel at. And coming from someone that has analyzed hundreds of financial statements, what we are seeing from Nvidia is absolutely stellar, and it honestly is quite rare. You don't see numbers like this, especially from companies this large, growing at these sort of rates for an extended period of time. Maybe for some companies it happens for 1 quarter out of the blue, but the fact that Nvidia has been posting these absolutely staggering results for over 3 quarters now is just, it tells me that the secular trends for generative AI are absolutely here to stay. Now you see gross profit in the most recent 3 months coming in at $16.8 billion nearly for Nvidia. That is higher than all of the previous 12 months of last year combined. As you see, they posted right around $15.35 billion for the 12 months ended January 29th, 2023. That is absolutely staggering. This company posted more gross profit in 3 months than they did in all of 2022. For the full year, gross profit coming in at $44.3 billion. We've said this before, this company really doesn't look comparable to itself on a year-over-year basis. It looks like we're comparing 2 different companies that have 2 completely different business models, and that's what makes results like this so rare. On top of that, you have operating expenses that are not nearly budging as fast as your gross profit and your revenues. As you see, operating expenses coming in at we'll call it $3.2 billion for the last 3 months. Last year, we were right around $2.5 billion. And so a lot of that gross profit we can drive right down to the net income line, right around $12.2 billion. Last year, we were at just $1.5 billion. For the full year, net income coming in right underneath $30 billion. Again, for the full year 2023, we were sitting at roughly $4.3 billion of net income. And so again, from a net income, from an EPS, from a revenue, from even an operating income perspective, this company has absolutely showed you why it deserves a premium in the market, and really showed you why its stock has rallied hundreds of percent over the past 1 year. And it continues to get better. As we take a look at their balance sheet, it is now cash loaded. sitting at roughly $26 billion of cash and cash equivalents, another $10 billion in accounts receivables, total current assets coming in at $44.3 billion. You see inventories not really budging as they're up just marginally year over year. And so that tells you that this company isn't really sitting on a ton of inventory. All of their inventory is being able to be moved through. They have still nearly $10 billion in receivables that they're waiting on. And so demand remains ultra strong over at Nvidia. And then on top of that, you have just $22.7 billion of total liabilities, your long-term debt actually declining on a year-over-year basis. And so Nvidia sitting at roughly 2 times current assets than total liabilities. This company from a balance sheet looking absolutely pristine. They can continue to pay off that dividend, will likely continue to increase that dividend over time, and then use some of that cash for buybacks and maybe little acquisitions here or there if they really need to. But the way Nvidia is growing organically really shows me that it's honestly a company better off without doing any acquisitions at all, really. From a cash flow perspective, again, paints a fantastic picture. We're sitting on roughly $11.5 billion worth of operating cash flows in these most recent 3 months. For the full year, sitting at roughly $28 billion of operating cash flows. From that, we pay just a little bit of dividends. We buy back roughly $2.6 billion worth of common stock in this most recent quarter. You see year over year that actually accelerated for a company stock that has gone up hundreds of percent. The fact that they have the guts to buy back more of their common stock, knowing that how fantastic their company is doing and really how fantastic their results are. That is something that takes guts and really a visionary leader to understand that even despite the fact that their stock has gone up hundreds of percent, it's likely still undervalued. Now, as we saw, all the financials over at Nvidia looking fantastic, their outlook also coming in absolutely stellar, higher than estimates, and showing signs that the demand for Nvidia's AI-related products remains at an all-time high. Now, from a chart perspective, what's tricky with Nvidia is identifying when to step in and buy shares. Certainly, if you don't have any position, it can be a bit daunting considering the stock is near all-time highs, continues to rally day in and day out. Really, you feel like when to get into shares of Nvidia. If you have been already in shares of Nvidia, you're likely sitting on a nice gain. And certainly you can continue to hold those shares. Wouldn't be a terrible idea. This company certainly isn't trading wildly overvalued, still just trading at a 32 times forward price to earnings. That's for their fiscal 2025, which has now just begun at a 32 times multiple. Certainly not overvalued for a company that's expected to continue to post rapid growth both on their top and bottom line. It's really, if you have no position in Nvidia, the time to buy is really on any major dips. Certainly we saw a pretty decent dip right around 8 to 10% in this most recent week. That could have been a great time to buy, but if you didn't step in at that point, I think the next level to step in, really according to this trend line, is when shares come down closer to, we'll call it the low $600 range. And certainly it seems like shares of Nvidia are a long way away from that, and they can continue to absolutely head higher in the short term. But I think in a stock like this, the last thing I want you to do is feel FOMO'd into it. You want to identify areas where Nvidia will find support, both from a technical perspective and would fundamentally make sense. And for me, that first pullback south of, we'll call it $650, closer to $620 would be the first level I look to buy shares of Nvidia. Really, when it comes back and retests this trend line, that would be a sizable pullback where I would consider picking up shares of Nvidia. From a trend line perspective, I think really any pullbacks closer to this trend line can be a fantastic buying opportunity. And I also wouldn't be surprised if shares continue to head higher, considering how stellar these results really were. At some point, the growth for this company will slow down, no doubt about it. But by then, this company's gross margins will look absolutely stellar at still close to 77%. And then on top of that, they'll have some of the biggest and best companies in the world as their recurring customers. And so those are some things to consider. On top of that, they'll have a pristine balance sheet, continue to do buybacks and pay off that dividend. And so with shares higher, nearly 8.5%, I think Nvidia still has room to run, believe it or not. And from a valuation perspective, not trading wildly overvalued either. That was my take on shares of Nvidia. Certainly a difficult one to enter considering how high the shares have rallied. But keep in mind, these financials look stellar. And then you want to wait for a technical pullback where it would make sense to pick up shares of Nvidia continuing in the uptrend. That was my take on shares of Nvidia. Let me know your thoughts on this one in the comment section below. Congrats to any shareholders of Nvidia that have been part of this company's ride for really any period of time. You have made a killing, and give yourself a pat on the back for that. As always, thanks so much for listening, and I'll catch you guys in the next video.